When I left the White House in 1981 under President Carter, we had $900 billion of debt. Now we have $31.4 trillion.
Wow.
Tax cuts were so extensive in the early part of this century, and we never really paid for it by having spending cuts. So the result is we now have more debt than we probably should have. And the only way out of this is increasing taxes or cutting spending or inflating your way out of it. And right now we're probably inflating our way out of it. In the end, our grandchildren are going to have to pay for this. We don't really have to fix this until about June the 15th. And by then, we'll fix it. The day before we have to fix it, this problem will get solved, but not until then.
Well, I'll tell you, I don't know why time and time again we're at the cliff. Right? I mean, look, you've got all this time. You're saying it. Everybody's saying that they could move money around, and
right.
It's not really a problem until June. So have the conversation now. Start putting boundaries in place in terms of spending. It's not just those tax cuts. You've had $5 trillion in borrowing just in the last 2 years with all of these spending packages. You can't tell me all those spending packages did not include waste.
Well, I can't tell you that there's no waste in government spending. I think that would be ridiculous. We have a budget that, $7 trillion, so I'm sure there's some waste. But the real problem is that we're living past our means.
Yeah.
We're just spending more than we really can afford. And most people who pay their bills sit down at home and pay their bills. They wait till the last minute to pay them, probably as well. How many people pay their credit card bills the first day? So the government You do?
I do.
Okay, well, you're rare. But usually people wait until the end, and that's what the U.S. government's doing. And we will wait until mid-June before we have to really pay it, and we will work it out. Congress is not going to allow a default to occur because the results in the markets would be too cataclysmic. So
you say taxes will have to go up or spending will have to be cut. Do you worry that higher taxes now will actually accelerate this slowdown that everybody's expecting? How do you assess the macro story?
Well, there won't be higher taxes because the Republican Congress is not going to pass higher taxes, or the Republican House is not going to pass higher taxes. But that's a traditional way you can deal with this problem. The only way we're going to really deal with it right now is inflate our way out of it. That's what we're really going to do. But we don't want to have too high inflation. We're trying to get that down as well. In the end, we have a printing press, and the rest of the world is willing to let us keep printing dollars, and they'll buy them. People like to buy U.S. dollars because there's no other reserve currency. So we don't have a sovereign wealth fund. We have a printing press, and that's why we are able to do this. If we didn't have the reserve currency in the world, the only one, we wouldn't have been able to borrow this much money.
Yeah. What's your sense of markets? I know you said that 2022 was a disaster for technology, real estate, crypto, clearly. Are you expecting any rebound this year? How do you expect things to play out?
Markets usually do rebound, and obviously when you think things are really bad, that's when it's probably a pretty good time to invest. So the best time to invest is really when people see blood in the streets, people are nervous, people are walking out away from markets. That's the best time to invest. So I think you're going to see really good deals done now, but you won't know how good they are for 3 or 4 years. In
terms of those deals, investment banking was a nightmare last year. Do you expect the capital raises in debt and equity and IPOs to come back this year as well?
Not in a great level, but it'll come back from where it was because it was really bad last year. But as the interest rates go down and people start to borrow a little bit more, and I think the banks right-size themselves, I think ultimately you'll see more deal doing getting done, yes. I
feel like there's a little bit more positive assessment here on the ground than I expected this week.
When I started coming here, I was reading the newspaper accounts that said everybody was pessimistic. When I got here, it wasn't so bad.
Exactly.
People are thinking it's not the end of the earth, and we've had worse times in Davos than this year, for sure.
China, a big topic of conversation as well. Bridgewater Associates saying that they will double the assets under management in China. They're doubling down on investing there. You say China is likely to grow dramatically this year.
China reopening is the big economic story of the last couple of weeks or so because China has decided to change their no COVID policy to 100% COVID policy. Now they want natural immunity, and ultimately everybody will get COVID, but ultimately the economy will stay open. I think China will probably grow at 6 to 8% this year.
That's a big number.
It is a big number. But remember, they used to grow at 8 to 10% a year, and given the population they have and given the growth policies they have now in the government, I think 6 to 8 is not unrealistic.
Yeah, but David, what about the risks associated with investing in China? Would you invest in companies that are tied to the Chinese military, given this provocation that we're seeing increasingly out of the Communist Party?
Well, it's like asking me if I want to beat my wife or something like that. No, of course I don't want to do anything to help the Chinese military. But the truth is, you can find things that don't help the Chinese military. But the real problem is not new investments. It's existing investments that American investors already have there. So a lot of private equity firms and other non-private equity firms have enormous amounts of money already there. And right now it's kind of frozen. You can't get it out. So I think that is where the effort's going to be, is try to figure out how to liquefy those investments. You can't get it out. I mean, is a Western company ever going to get the same equality as a Chinese company operating on the ground in China? Well, is a Chinese company ever going to get the same kind of equal treatment in the United States as an American company? Probably not. I mean, I think it's more difficult to operate in China than many other countries.
You can't compare this government to the Communist Party.
I wasn't doing that, but I'm saying no Chinese company operating in this country can operate the same way an American company can, and no American company operating in China can operate the same way a Chinese company can, and that's just the way it is with most countries. But right now, it is difficult to extricate yourself from a Chinese investment. There's no doubt about it. And because of that, there's going to be less money put in by Americans into China for the next year or so.
In terms of private equity, David, is now a point where there just are no exits. You know, you just don't, you invest in a company with thoughts that perhaps down the road you'll take it public, you'll exit out. You don't have that opportunity right now, right?
Well, people always have expectations of making 2 or 3 times their money when they do a private equity deal. And getting that kind of rate of return now is harder because it's harder to exit. So people will probably lower their return expectations, but people will do reasonably well. It just may push it out another year beyond what they had wanted to do.